The Victoria real estate market has reached the tipping point, and we're finally starting to see the full effects of interest rate hikes, and prices are coming down across the board, all the way from Souk to Sydney. I say finally just because, unlike other markets in Canada, Victoria has fared very well up until this point, but the standoff is over and sellers are now letting properties go for less. But just how bad is it? My name is Ara Wiley, and in this video, I'll share exactly what's happening in Victoria right now and where we may be headed. Before I get into the gruesome numbers, as always, remember to hit subscribe and leave a comment below about your experiences in Victoria's crazy real estate market. So buyers now have had a full month to digest that huge 75 basis point rate hike, and there's two key upcoming dates to watch in October. On the 13th, we'll get new CPI numbers to see if inflation is going down or not, and on October 26th, another potential rate hike. Regardless of that inflation number on the 13th, Canada will likely follow suit with what's happening in the US. And it's not looking good down south. Inflation etched down a little bit, but the numbers are still very high, and they did a 75 basis points rate hike to try and counter it. I predict we'll follow and see maybe two more half-point hikes until the end of the year, which will bring the overnight rate to 4.25% and the prime rate to 6.5% as we start the new year. Now, there is some optimism because the global price of crude oil is falling, which should help the inflation numbers, but that's certainly not the case here in BC with gas prices rising again. Once again, we get the most expensive gas in Canada here in Victoria, but that's a topic for another video. Let's get into the numbers. For September, detached homes in Victoria are down 2.4% compared to August. Townhomes are down 2.2%, and condos have fared better. They're only down 1.1%. With buyer affordability so bad right now, it does make sense that condos and entry-level segments are holding up better. Looking at the year-over-year price changes, the market is still up considerably across the board, but I think the monthly change is the important one to watch as it can indicate where we are trending. Inventory is way up. We have double the amount of active listings we had a year ago. We started this year in a seller's market, and now we're firmly in the middle of a balanced market, and it does look like we're trending towards a buyer's market potentially. So what does this mean for the Victoria market? The amount of price drops, canceled listings, and relisted homes is at a record high. We still aren't seeing a big 20% drop like some areas out east in markets like Toronto, but motivated sellers are starting to sell at a discount, and inventory is staying on the market much longer. There are a handful of homes selling 10, 15, or even 20% under ask. For the patient buyer, there are deals to be had now, as some sellers have found themselves over-leveraged and having to sell. The paradox here is at the same time for buyers, overall housing affordability has gotten worse. In fact, it's at a record high. They simply can't afford to pay the current prices, so they aren't buying, and that will lead to more downward pressure on prices. I think it's going to be a reluctant decline, not a full-out crash, but there are going to be some deals from sellers who got caught up by these high rates and absolutely have to sell. Most sellers can hold out for 2 to 3 years if they have fixed-rate mortgages before feeling the high interest rate pain too much. Hopefully by then things have stopped rising or even come down a little bit, but that's just too far out to predict. The sky isn't falling. I don't think we'll be looking at mass foreclosures anytime soon. People will cut spending, they'll cancel subscriptions or rent a room in their house before even talk about foreclosures on a massive scale. The rental market here is also very strong, and that will prop things up. And Victoria, as always, will be more insulated compared to other markets in Canada. But I do think a 5 to 10% decline across the board next year looks very realistic, especially as all signs point to a recession in 2023. Who are the buyers still out there? First-time buyers are still looking for homes, and they're getting squeezed by high rents. They want home ownership, they want improved and more stable living conditions, and they want to start climbing that property ladder, but their buying power is quickly being eroded with the high interest rates, so some of them are very motivated to buy if they've locked in a lower rate. The dream of a detached home in the core is now a reality for them, with some detached homes selling under $800,000. Another segment still buying is out-of-town buyers and retirees. They're usually cash buyers, so they're unfazed by the high rates. They're also keen to retire, and they don't want to wait a few more years. They want to start living that island lifestyle now. Who's not buying right now? I'm not seeing a lot of investors, developers. I'm not seeing anyone who's switching homes, either upsizing or downsizing. It's very hard to do in an unstable market. And if someone had a fixed-term mortgage at a low rate from 2 or 3 years ago, the prospect of jumping ships and potentially losing that rate is not very attractive. Porting a mortgage is not always possible either, and sometimes there's complications or expenses when you try and port a mortgage over. For investors, if the bond market goes above 5%, then real estate will not be as attractive as an investment and more money will move away from it. Small investors who purchase a second home for a rental property may find themselves being squeezed with the high interest rates and will soon be paying only interest and nothing against their principal, and finding themselves in the red each month. And so these people may have to sell. The bottom line is, it has long been said it takes a full 6 months for higher interest rates to take effect, and that's spot on what's happening right now as prices start to decline. Prices are coming down, and there will be opportunities for savvy investors and cash buyers who can write lowball offers, but we're a long way from knowing just how far this will go, where the bottom is going to be. I would love to hear your experiences and some of your predictions in the comments below, and please do remember to subscribe as it helps me make more videos like this in the future. Thank you for watching.